Now, here's this. If somebody's a really shady operator, guess what? They're going to get their money out, but I always look for operators that are putting in more than their acquisition fee on any particular deal. That way, it's not just them getting paid from the deal and that they're just recycling that money back in, but they're actually putting in a lot of their own personal liquid capital.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? And welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Catani, and I am joined today by Whitney Elkins-Hutten. Whitney is the Director of Investor Education at PassiveInvesting.com and a partner in 700 million plus in real estate, including over 6,300 residential units. Those are broken up between multifamily, mobile home parks, single-family rentals, and assisted living, and more than 1,400 units in self-storage units across eight states, and experience flipping of over $3 million in residential real estate. Whitney, welcome to the show.
Thank you. Pleasure to be here.
Grateful to have you. I was joking offline when you first came on. I was like, I know this name. And I'm on the PassiveInvesting.com list. I've had Dan on the show. He was incredible. And sure enough, I searched your name and there's all your incredible webinars that you've done. I have watched a lot of them. So we're grateful to have you to drop your wisdom on us today. So before we get into that though, take us back. Give us kind of the Reader's Digest version of, where you started and what led you to where you're at now.
Oh my gosh. Yeah. So I'll start where I'm at. I'm the Director of Investor Education here at PassiveInvesting.com. I work with investors on a daily basis to help them, understand their goals, their risk tolerance, just to educate them to go into passive investing with confidence, into their first or next deal with confidence. Now, that's not what I went to school for. That's not where I started out. I actually entered into real estate back in 2002. Completely by accident. I bought a house with a significant other, and about a month after closing, the relationship fell apart. And I was like, oh no, I've got all of the house, all the bills, everything under my name. I didn't know what to do. I mean, this is the wild, wild west of lending. I was 103% financed. I owed my family money because they gave me the down payment. I mean, it was just, yeah. And I was like, okay, I'm scrappy. I have to make this work. I don't let people down. That's a value in our family. We don't let people down. Anyways, so, the house needed rehab and I went and got the Home Depot 1-2-3 book because YouTube didn't exist, guys. All this wonderful information that's available today. And learned how to do many things in the house that I've loved doing, painting, construction, oddly enough, hanging cabinets, a lot of things I shouldn't be touching at all, like drywall and electrical and plumbing, definitely not plumbing, and made an amazing profit, more at that house in 11 months than I did my day job for a full year, traveling 80 hours a week. So wow. I was kind of bitten by the real estate bug. I had stopped the house full of roommates. So I was doing what they call now a live and flip house hack. I was like, how many more of these projects could I do? I didn't know what I didn't know, because fast forward a few years later, I wasn't financially free. I didn't have my time back. If nothing else, I had another job working on a house after hours and on the weekend. And I was like, I can't unlock these golden handcuffs. So then somebody mentioned to me, why don't you hold on to the houses? I'm like, and just rent them out and collect a check. I'm like, oh, that's brilliant. So we transitioned into buying whole type real estate. Fast forward a few years later, we had a strong portfolio of single family rentals, but then I had another problem is I was asset managing all of them. And, you hit a level of achievement, and each time you hit that level of achievement, you've got to reassess your goals or find a person or a process to replace, to help you bust through that ceiling. And so I shouldn't say last ceiling, but at that particular time, I had a little baby at home. I was taking care of family members, and I'm like, I don't have time to search for 80 single family properties to reach our financial independent goals. I don't want 80 single family properties. And that's when we transitioned to multifamily real estate, both actively and passively. And, over the years, I love working in real estate. I love being active in real estate. And at the same time, what I help investors realize is if you can get all the benefits of real estate through passive investing, replace your income, now you're truly financially free. You don't have to be the weekend landlord or, go buy a building and figure out how to rent it yourself. So yeah, that's where we're at today, is having one of the, we have many of the freedoms in life. There's 5 freedoms: financial freedom, time freedom, freedom of choice, freedom of location, and freedom of impact. And we're working on, achieving all of those today.
Gosh, I love that so much. And what a great story, kind of the original house hacking before it was house hacking, before it was cool. And you kind of touched it all before it got there. You even, got to have the 103 levered, and obviously that's gone away.
Terrifying.
Yes, very. And
Some
thank
people do
heavens
really
it was,
well with it, not me.
thank heavens it was 2002, not 2007, because that could have gone bad. So it sounds like you made it through 08 though. So with that portfolio that you had.
Mm-hmm.
Good.
Yeah,
good.
08, we were, like I said, we were living flipping. So by that time, my husband and I, I'd gotten married, and I had convinced my husband that real estate's the best place to be. My first deal went amazing. My second deal, which I rarely tell a story, did not. Went completely sideways. I broke even on the deal. I definitely probably made out ahead on taxes. But the deal ended with a bus falling on the roof of the house, and I thought it was going to get sued. And so my husband's entering the picture. Yeah, the house was, built into the side of a mountain. And so my neighbor had a guy living in a bus on our property, and he had it parked on top of the retaining wall behind the house. And so when I went under contract, the inspection showed the retaining wall. They said it was failing. I was like, it's not failing. Just get the guy to move his bus. It's fine. And so the buyer it was a young couple. They were engaged. And I think that the fiance was trying to prove to his soon to be wife's father that, hey, I can handle this. And it just went out of control. But they rebuilt the wall. They moved the bus, rebuilt the wall. They put the bus back in the same position. Wall fails. The bus topples in the roof of the house. Yeah.
That is probably the most unique story I've heard.
Well, and my realtor calls me, and there's a ton of commotion in the background. This is probably 3 or 4 days past closing. Fortunately, my boyfriend, now husband at the time, he was out of town. And I was like, why are you calling me? And he was like, well, just wanted to let you know how the story ends.
Oh my!
I was like, am I gonna get sued? He was like, no, you're fine. It's their problem. And I'm like, okay.
Oh my gosh, that's insane. Wow, that's a wild story. Well, so you have truly experienced it all. And now here you are, you're the director of education, which we know in this space is the most important, right? When you're thinking about becoming a passive investor, when you talk to someone, the first thing they should do, and, I assume you'll agree with me here, is, make sure you're educated. Okay, what do you want to do? Your goals. So let's kind of get into it. I know you have a process as a passive investor yourself. So kind of talk about, speaking to the new passive investor who wants to get in it for the first time, maybe has a little knowledge, understands the power of it, and wants to explore it, and kind of setting up that process.
Yeah, definitely. So, there's oftentimes when I hop on a phone with an investor, especially a new investor, they fall in one of 3 camps. One, they're just a tired landlord. They understand real estate. They understand real estate investing. They're ready to give up control of their portfolio to get their time and attention back, which is probably one of the most important freedoms, I feel. Because it's gone. You can never recoup your time or your attention. So they're ready to fire their property manager. Lowe's and Home Depot, they're done. And they're like, please help me transition this equity into passive investing. They get it. Another camp is, you know, and I'll kind of wrap up the next two camps together, is one is a really savvy investor, right? They've been in the stock market and they've invested before. They understand, you know, risk, returns, but they don't understand real estate at all. So they don't understand that you actually get paid 5 ways at once in real estate. They're just looking at, you know, what is it going to be my monthly cash flow and what is my appreciation at the end? And oftentimes they're just asking about the return at the end when they sell, because they've been, you know, when you're in the stock market, paper assets, that's really all you can bank on. You have to actually sell the asset in order to get a return. And then you have the newer investor, which is they've been trained as they've grown up to look at returns. They know they should invest. They know they should grow their portfolio. But what both of those last two investors really probably come in challenged with is not fully understanding, do they believe in real estate as an asset class? That's the first question. Do they actually know that you can get paid 5 ways at once? It's very different than investing in the stock market. It's not as volatile as the stock market. And when you invest passively, you are handing over control, which you do when you invest in the stock market. You just you have a perception of control because you know, Elon Musk sends out a tweet. I always pick on Elon, sorry if he ever listens to this. But, you know, he sends out a tweet and Tesla's stock bounces all over the place for the day. But, you know, you could liquidate and you could get out of that stock, right? So you have some sort of perception of control, but you really don't. You're not picking, you know, the funds you go into. Oftentimes, you're not even, you know, picking what stocks go into those funds. There's a lot of things out of your control. And so they don't, first having a conversation. Do you understand you can get paid by cash flow, appreciation, tax benefits, that you can get an inflation hedge, and that you can actually utilize leverage in order to build your wealth? Those are not all those things can you get in the stock market. And I challenge you, you might only get one of those levers in the stock market. And then 2, I'm having a conversation around, like, what do you actually need moving forward? What are your goals? What do you need your portfolio to produce? Do you need it to produce cash flow? Do you need it? Are you in a stage in your life where you need to continue to accumulate wealth? Do you have, maybe you sold off some real estate or you sold a business and you need to offset capital gains. You need the tax benefits of real estate. Are you trying to build a multi-generational wealth portfolio for your heirs? You know, let's talk about how to structure something like that. And so getting people to really think through the goals and what they need, both now and later, is super important. And oftentimes with somebody who is an investor who has a very stable job, a high, you know, performing or a high pay job, they're not worried about cash flow. That is not like on the radar. And they're like, just give me the highest rate of return. You know, we have a conversation of why looking for cash flow in an asset is super important, especially in today's environment, because it's a sign of stabilization. So I kind of help them pick through those different like wealth pillars and what it means to their portfolio and their goals. And then we talk about risk tolerance, because, you know, that those last 2 groups of investors, especially that second group that I discussed about, they're all about the return. They're chasing yield. And they often don't understand that yield generally comes with increased risk. And so we're talking about, they're like, I heard you can get a, 10% preferred return, a 30% IRR in multifamily real estate, and I want absolutely no risk at all. Like, I want to be in a core plus asset, core asset, or a core plus asset. You know, and if you don't know what a core plus asset is, that means it's newly built, no deferred maintenance, no capex. You're just kind of like scratching your head, and you're like, I don't know where you read that, and yeah. Anyways, so, you know, trying to help them understand the balance of risk reward, and then a lot of these returns are actually buried in those other wealth pillars: the ability to use leverage, the ability to inflation hedge the asset, the ability to generate cash flow. And so those are really kind of the first 3 stops along this conversation. Do you believe in real estate? what do you need from your portfolio, both today and later? And I always, I will get off the phone with an investor who maybe is earning $250,000, $300,000 a year in their tech job. They're like, I don't need cash flow. And I'm like, what happens if there's another tech bubble? Wouldn't it be nice you had some cash flow coming in from your portfolio today? If not, if you don't need it, just put it in the bank account, accumulate it, and then like put it in the next asset, right? Just snowball it going forward. But if you decide 2 years from now, you want to take a sabbatical, flip the switch and consume your cash flow. And then like the third piece is, understanding risk. And once you kind of have those pillars in place, those questions answered, now is the great time to go start talking to operators, just sussing out who are the operators that are going to help you achieve these goals.
Yeah, absolutely. A lot of really, really great points there. I love that, because I think we've all talked to one or obviously many of those different type of investors, right? And the yield chasers, I love that 30% IRR and 10% preferred return in an A class. You're like, yeah, okay, cool. Tell me the operator who's doing that, because I want to invest in their deal too. But yeah, no, it is good, right? Obviously you can't actually say that, of course, right? But that goes back to the education piece, right? Helping them understand that yes, those deals are there, but they actually look more like this, right? You're probably looking at like, a development deal, or like, a heavy value add, and just kind of helping them understand where those numbers come from. Where do you find people are typically getting their education from? Do you find that they're going to your website and looking at your guys' education and then calling you? Are they reading books and listening to podcasts and kind of just spouting off information? Where you typically do you see them finding information before they, you get on the phone with them?
That's a great question. I think it's pretty much all over the board. And I love the fact today that, anybody can jump on YouTube and Google passive real estate investing and get, some education. Now, I can't say all of it is quality education. There are a few operators out there that are doing high quality education, and I love it. I wish that was there when I was like first starting off of passive investing. It wasn't. So, YouTube can be a good source. Podcasts are an amazing source. I mean, that's, how I turned my cell phone into a mobile university for the first few years that I got into real estate. There's online forums as well. Some are just general real estate forums like Bigger Pockets. Then there's ones that are more specific, investor groups like CrowdDD or Left Field Investors, or For Investors by Investors, like if you're on the West Coast. Those groups tend to bring in, high quality speakers and potentially people to invest with. For me in the mountain area, our group is Boulder Investment Group. Sorry, stumbled there. But they bring in high quality education and high quality operators to speak to investors. I also encourage investors, especially if you're getting serious, immerse yourself in a high quality conference. We have our Multifamily Investor Nation conference. It's held in June in Charlotte. And I mean, that is an amazing place to, get high quality education and also meet a ton of operators face to face. I love nothing more than like shaking hands with the operators that I invest with and asking a lot of questions face to face. Now, Google is an amazing source. And, it's hard to differentiate, just like with anything else. Like when you do a Google search, I have a 10-year-old daughter. So we're having this conversation all the time when she does research. We're like, is that a reputable site, or is it just really well marketed to you? Does it have like a bunch of cool colors and appeals to kids? That's same thing happens in the space as well. So you want to make sure that, you're finding operators. My favorite place is to go to these high-end type conferences, the ones that are very in-depth, because, it takes an element of pay to play, both on the operator's part as well as the investor's part. And, if an operator, can, invest in themselves, $5, 10, 15, $30,000 to be at the conference, that gives you kind of like a little bit of a clue as to like the stability of the business. But, there's also, operators are in every different stage of their growth. And so, conferences would be number one. These very targeted investor groups would be number two for me. And then, you can jump on online forums, there's several really great ones out there. And then just a plain old Google search would probably be my last choice to find a good operator.
Yeah, I love that list. And there are, right, you guys have yours, you've got, best ever, so I'm in Salt Lake City. It's right here in my backyard, next year, which will be amazing. I'm excited for that. But it is true, right? That's really where you can separate, the real and so many people want to, and like, I'm so glad that in-person conferences are back, because so many people, before they want to invest, they want to shake your hand, and as they should, right? A lot of people like to understand the I guess the vibe that you give when you're in person, right? Like, can you back up what you're like on the phone when you're in person, and are you personable? And, and I totally get that, right? Some people are writing a check for their savings, to give you potentially. So,
it's energy, right? They're handing over their hard-earned, the energy that they've converted in, the value they've put out in the world that they've converted into money. And they're handing it over to you as an operator, to help them build their wealth, right? One of our founding partners, Dan Hanford, he has a triangle that he likes talking about. It's the know, love, and trust triangle, or no, like, and trust. I always change like to love, but step it up a little bit. But that is really important, because the first place, we talked about education. That's getting to know an operator, right? It's a transactional exchange. Then you get it on the phone with them or meet them in person. Do you actually like them, right?
Yeah.
I come from public health and nutrition background. I'm always educating people. Hey, the gut is was our first brain, and still is. I mean, same neurochemicals that fire in the brain fire in the gut. And like, what is your gut instinct about this person? Are they personal? Are they trustworthy? Are they transparent? Do they know what they're talking about? And then, it takes time to build this relationship. And then, getting into the trust factor, and sometimes that trust factor, we talked about it before the show. Somebody might be like really like nervous to write that first 25K check or 50K check. But over time, it becomes easier, especially with an operator, if they're performing and they have a good track record. If they're delivering on what they said they were going to deliver. Bumps happen. Things happen in real estate. I don't know. I don't know of anybody who didn't have like a challenging time either during COVID, the hurricanes in 2020, or in early 2021, whenever everything went down in Texas with the power grid. I mean, every operator I know got snagged by one of those three events. And so you want to understand what an operator, how they're going to meet a challenge, and steer the business plan through to make the asset profitable for everybody.
Yeah, absolutely. That's such great insight. And kind of on that, so we talked about your three pillars. Next, obviously vetting your operators. We talked about know, like, and trust. Obviously meeting them in person, getting a good feel for them, all important, but there's obviously more to it before you really decide that, yes, I want to go ahead and invest with this person. So kind of talk more about, your process and how you steer investors for vetting an operator.
Yeah. So if I may, I have a free ebook. If you go to passiveinvestingwithwhitney.com, you fill out a quick little form so I can get to know you a little bit. And you can download some free goodies, free ebook, free checklist. So you don't have to remember everything that we're talking about here in the podcast. It's all like listed out. But, if we're going through kind of a vetting protocol for an operator, what's their background in business? What's their background in real estate? Especially if they're new or a newer operator, do they have translatable skills from running a previous business? And do they have somebody on their team that understands real estate, right? I like operators, that operations teams, where there's more than one partner on the team. It just, coming from a business background, you want, succession planning, right? Like if something happens to one, there's other managing partners that can, step into the mix and help steer the company. What is their track record? How many deals have they done? How many have they taken to refinance or a supplemental loan stage? How many have they exited? What is their typical business plan on the asset, right? What you're looking for as an investor is an alignment, right? You've already written down your goals. You already have thought about your risk tolerance ahead of time. You're not letting somebody else inform you what your risk tolerance should be, right? And you're looking for alignment between what you need from your portfolio and what they can give. And it's a partnership. And then that's another kind of wall I help break down for people. If you're used to investing in the stock market, it's transaction based, right? I write a check, I can always get it back. We're not partners at all in the stock market, but in a passive asset, we are. I'm the general partner, or my team is, and then we have, you as the investor are the limited partner. And, we each have our roles and responsibilities in that. And so, but we're structuring the deal to where we all make money together. We all take on the risks with that deal together. And so you also want to understand, and I go into that to bring up two things when you're having this conversation with an operator, is you want to understand the structure of their deals. Are you guys aligned in that partnership? Also, what does the communication look like? Are they communicating with you on a monthly basis? What are they communicating to you? Are they handing over financials? If so, how often? What are they disclosing? And so, especially like on multifamily, I love getting quarterly rent rolls and, the actual profit and loss statement from the property manager, as if I am the business owner, because I am one of the owners. So those are just, kind of high level questions to ask. You might, other investors might also want to see the general partnership invest in their deals. Sometimes, that creates alignment. If an operator is just starting out, they might not have the ability to invest in every single one of their early deals, but you want to see some sort of skin in the game. Now, here's this. If somebody's a really shady operator, guess what? They're going to get their money out, but I always look for operators that are putting in more than their acquisition fee on any particular deal. That way, it's not just them getting paid from the deal and that they're just recycling that money back in, but they're actually putting in a lot of their own personal liquid capital.
That's a nice little nuanced detail there for sure. Mm-hmm. That's very interesting. Yeah. And that's another thing too, kind of getting into the weeds there is, making sure you can get access to those accounting statements, like you said, like the P&L and the quarterly statements, right? Because I'm sure there are probably operators out there where in the PPM it said, that you couldn't get access. So, that's another thing to ask as well is, hey, can I look at the books basically more or less, and understand what's going on. And of course, track record is probably the biggest, but I do like that you're, most people talk about only investing with people who have this big, massive track record, but there are operators starting out that are good, that will be good. So I like your, what business skills do they have? Does it translate? Because this is a business, right? And so being able to, the acquisition is really just step one, and of course everyone celebrates the acquisition and it should be celebrated, but that's when the real business starts. And especially in the economy we're heading into, this is really going to tell the people who just rode the market and the people who have a legitimate, can actually, manage an asset.
Mm-hmm. Absolutely. Yeah. Closing on a deal is one thing, being in the weeds with it, managing it day to day is an entirely different thing. And then if is part of the business plan to rehab asset to increase rents? Is it part of the business plan to, create, different vendor relationships to decrease the expenses? Or is it to, institute other channels of income on the property to add additional streams of income? Adding storage lockers or package lockers or bringing in fiber internet, those are all different skill sets and that somebody, needs to bring to the business plan. And there's a timing, right? I've seen some really aggressive business plans where somebody says, we're going to have, it's 200 unit building. We're going to have it rehabbed in a year and we're going to have all these things done. And I'm like, I always think of the quote from like Tony Robbins, like people overestimate what they can get done in a month and underestimate what they can get done in 5 years, right? So it's just like, how ambitious. And if the numbers rely on delivering on all of those things in the first year, is that realistic? You want to be able to, now we're getting kind of the weeds on like, assessing a particular deal, but you can get a sense from the operator, their success on, previous deals or in their previous businesses on, are they able to, identify those goals and set them realistically so they can achieve them.
Yeah, absolutely. And, like, do they have a rinse and repeat, right? Is this the same thing they've been doing, or is this a new business plan, right? Maybe same asset class or, but a new type of business plan, right? Maybe typically they go for A and B and now they're getting into C class value add. And it's like, okay, well, that's riskier, like, what infrastructure do you have in place? Another one that I like is, does your team have the bandwidth? Like, how spread thin are you? Is your asset manager managing too many assets and doesn't have a full team, to help, right? Like those little things where it's like, more and more. We definitely saw this in the last few years, acquisition, but it's like, okay, well, do you have, the infrastructure to manage all of these assets?
Oh, absolutely. And you don't just, an operator just doesn't open up a 30-person private equity firm. I haven't seen that, but they have to grow over time, and are they scaling appropriately? And that's where those business skills really come to light. And also, if it's somebody who's just starting out and they're like, maybe they have a strong background in real estate, they start getting into capital raising or syndication, maybe they don't have those business skills, but I bet you if they're super savvy, they're going to go get a mentor or a coach that's going to, or some sort of strategic partner that's going to help them identify those gaps and fill those gaps really quickly.
Yeah, absolutely. I love it. Well, this has been incredible insight. I appreciate it very much. I know we can keep going forever on this topic. And I appreciate it very much. But as we wind down here, we will jump to the final 5. And so speaking of mentors, first question, best advice you've gotten from a mentor?
Oh my gosh. This would have been my financial mentor that I hired a long time ago. He was amazing, but he helped me understand how to access my personal retirement funds, because I was just shoving everything in there as much as I could, and really just unlock those funds in order to invest in myself and in my own personal assets, and not stay in this nebulous partnership with the government.
I love that. Wow, that's huge.
Essentially, I broke up with the IRS.
Oh no, you poor thing.
I'm in real estate, so not entirely.
Yeah, well, we still have active income, unfortunately, but well, at least I do. I'm sure you do as well. So, there are some things you can't quite, they get you somehow. I swear they always try to win somehow, but I do love that. That's awesome. What is about your career?
I learned the rules. That was the most important part.
Yes.
Yeah.
That's how you play the game, right? Know the rules.
Mm-hmm.
What is it about your career that makes you feel like you're fulfilling your why?
So I did not know this about myself. I came from public health. I worked in sexually transmitted diseases and HIV, AIDS, and then in bioterrorism. And there is always such a strong component of public education with my job. And I always liked it, but I never considered myself a teacher. I was like, this is part of the job. I'm a researcher. This is what I have to do. But I really love it. I love, giving people great, solid information that they can count on, and making it simple and actionable so they can change not only their life, but the lives of people around them.
It's awesome. I love that. Favorite non-real estate or investment related book?
Oh, the one thing. I know. I tout that all the time,
Nice.
and I'm sure other people have said that, but the one thing by Gary Keller, that book, you read all these books about personal development and how to prioritization, but I struggled to get a simple framework out of that, out of any of those books. And when I read the one thing, I was like, huh, it's really that simple. It is. And that book has been so impactful, not only for my life, but my family's life and our marriage, actually. So,
I love it. Wow, that's awesome. If you could have any superpower, what would it be?
ooh, my daughter loves asking these questions. For me, if I can budge a little, I would love if, she always asks me like, what superhero would I be? And I would be like some sort of combination of Captain Marvel and like Doctor Strange.
Ooh,
There's just
nice.
something about like manipulating time and just, being able to conquer the world would just be amazing.
Absolutely. No, I love it. That's great. That's great. That's what this that question is for, right? It's the fun part of it. Cool. Last one. What's the best way for people to get a hold of you and learn more?
Yes, you can find me at passiveinvestingwithwhitney.com. It's the landing page on the passive investing website. That's the only place you can get all these free tools that I spoke about, and also get access to my calendar and hop on the phone with me and we can talk real estate.
Awesome. I love it. We'll link it in the show notes. Make it super easy. Whitney, thank you so much for all of your insight and your time.
Yeah, thank you so much for having me on. This has been amazing.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to KataniCapitalGroup.com to learn more.